biggest difference in success is they are actually making more money because they know where the money's coming from and where it's going. Where the money's coming from and where it's going.
Each and every one of us is a legend. We have a story to tell, a world to build. And if you're here because you are done just striving to make a dollar because you want to make a difference, then you are in the right place. Welcome to LegendMaker Radio, a LegendMaker Global podcast. Welcome to LegendMaker Radio. I am so honored to have you in these hallowed halls. Can I just do that? Okay, I know that's over the top, but whatever. Welcome. It has been like forever, and literally forever, because Clarissa and I go way back, and this is the first time we've actually sat down face-to-face, one-on-one, and had a conversation. So, Clarissa, tell the fine folks in the LegendMaker Radio audience who the fuck you are, and what the fuck you do, and who the fuck you do it for.
Okay, thank you for having me. I am so excited to be here. Yeah, we do go way back, I don't even remember when we met. I think like 2015, like online or something like that.
Yes, something like that.
Okay, so I am an accountant. I have 3 college degrees in accounting. 2 of them are masters in forensic accounting, which is fraud. So I love the research. I love doing all of that stuff. And I also have 6 years of experience as a government tax auditor, which I use to help my clients, because I basically do the exact opposite of what I did as an auditor to help my clients stay compliant with the laws and make sure that if they do get audited, they're prepared. Because that's the easiest thing, is just be prepared for an audit, not just wing it and be like, okay, yeah. Because I've done over 150 audits and only 2 of them were easy because they were prepared.
Wow. Only 2.
Only
That's
2.
Wild.
150.
So that makes you kind of a secret weapon in your clients' back pockets, because you have all the insider intel that you need to be looking for. So welcome, legends, literally. In this way, you become a super valuable asset for the businesses that you're doing this work for. And I am really impressed, because I do not believe I could sit still to earn 3 degrees and to do this with these numbers. It's mind blowing for me. I can't fathom. So that probably tells you the state that my books are probably in. So anyway, your clients are very lucky, and they're very smart people, and I'm very happy that they were wise enough to get you on board. Now, here's one thing. When you do these, or when you were doing these audits, what was the trick or the tip off that it was going to be like massive problems?
The biggest tip off is, and I can even go, it doesn't even have to be an audit now. Like, all I have to do is look at your books, look at your financial statements, and I can usually tell issues right off the bat with looking at just those before I get into any details of going deeper and looking at transaction by transaction.
So what would you tell business owners who are in the different stages? Let's go stage by stage. Mm-hmm. The people who are just starting out don't even really know how to market or what they're doing. They're just they say, hey, I can open a business online. I'm going to go do that and make some money, right? Like, that's where they are. What piece of advice do you have for them to help them get their shit together?
So it's actually 2-part, because this is something that I recommend to all new business owners. 1, get a business bank account and separate all of your business money and your personal money. Do not do anything for your business through your personal account. If you don't have money in your business account and you have to put it in there from your personal, literally transfer it from your personal. Don't pay for your business from your personal account.
Gotcha.
And the second part is, yes, you still have to do bookkeeping from day 1. You can't wait until saying, oh, I made money last month, now I need to do my bookkeeping 12 months into your business. Because you're missing all of those expenses. Even if you have a loss in your business, you still have to report it because you still have a business.
Right. right? And that loss actually can work to your benefit in the end as well. So, all right, new people, if you're not yet, you're just starting to build your legend, get your books in order first, starting from zero. I like that. And I think that was probably one of the first things I did was start a business bank account and then just have that. My shit's not separate, but we're working on it. Tell me about somebody who is in the intermediate levels. Like they've been in business 2 to 5 years. They are making some money. They're not consistent. They still have that blend going on. They're still living from that business bank account rather than keeping it fully separate. What advice do you have? A different advice for them? How would they go back separating and doing all that?
So going about separating it would be literally just start from today, get that business bank account and start running everything new through that business bank account. You can still do your bookkeeping using your personal bank information, but you have to know which ones are personal, which ones are business. That's why the major thing is have them separated so that you can easily do the bookkeeping and know which transactions are which. And then you can, it just makes it easier to have them separated. But start with today with that business bank account and move forward.
So even if you've been in business 2 to 5 years, get out there and start your separate business account. If you already have a business account, but you haven't been conducting it, make today day one. Make today your first day and move forward from here. I know that for me, if I had to do that, my mind would be like everywhere. Like I would be like, no, there's no way for me to do this because I can't go backwards. I can't redo, I can't whatever. But if I had thought at that point, if I were in that thing and I was like, okay, this is day one, then there's a little bit less pressure there.
Yep.
And then you can get Clarissa to clean up the back stuff. Start from today and then get Clarissa to clean up the back stuff before taxes are due in April. But okay, and for what do you see different between businesses that are actually doing that, separating and keeping everything whatever? What do you see different in the terms of their levels of success compared to businesses that aren't yet in that mindset of I need to make this a priority?
So the biggest difference in success is they are actually making more money because they know where the money's coming from and where it's going. Because when it's all in your personal account, you have all those personal expenses going out too, as well as your business account, business expenses. But then there's also your business money, and maybe you even work a full-time job somewhere else. So you have that money coming in. So it's all intermingled, and you don't know how much success you actually do have in your business because you don't have that separation.
So would you go as far as to say someone is actually running just a hobby if they don't have their books as a priority?
That is what the IRS sees, yes.
All right, cool. So what?
But it's not always true because I have done bookkeeping for businesses that run it all through their personal. And yes, I do say you need to separate this, and we do get on that. And they are making a decent amount of money in their business. So if you were to get audited, the IRS is going to disallow all of your expenses except for purchasing of direct, say, inventory costs. So if you run an online business and you're not purchasing anything directly that you're selling, you lose all of your expenses. So you're taxed on all the money you came in with if the IRS sees you as a hobby.
One of the things you taught me the other day, literally the other day, I wish I had known, I started 12 years ago, right? So I'm an old dog in this trade, and I never separated out tax money because I was always of the mindset, taking 33% out for taxes was raising 3 kids and I was there's no goddamn way that's going to work. Even making 6 figures is it doesn't work that way. But then, Clarissa, what did you tell me?
So my email actually said to lower that percent. I think I said 15%. So 10 to 15% is all you have to save. If you can't save the whole 20 to 30%, lower it. So you're still putting money aside so so that when April 15th comes, you still have some money so that you don't have to hustle for, say, a $50,000 tax bill.
That was mind-blowing, literally mind-blowing. That was the most profound email marketing email that I have ever received.
And that wasn't even
oh shit, that's how you do.
That was just my Friday newsletter that I sent every Friday with money mistake, a money business tip, and experience versus expectation. So something where I've experienced it and what you expect.
Is it nerdy? Is it nerdy numbers? No.
Nerdy number lovers.
Nerdy number love. No, but what's the name of the email?
Number. I use the word number to get 6 different sections.
Yep. It's broken down, and it's super, super valuable, obviously. So if you're not on Clarissa's email list, you literally should be. Like, run, don't walk. nerdynumberlovers.com. Correct. So we'll put that on there on the on the screen. But one other thing that I learned from you, which was very profound. Wait, it left my brain. Hold on. It will come back to me. But you also have your CFO kit out. You have, what else do you have out? I
have expense deduction guide. So what you can expense as an actual expense deduction. There's also a section in that guide that describes things that you cannot deduct as an expense in your business. There's not many, but it's like your makeup, your clothing, and getting your hair done. Those things are not business expenses. I don't care that Donald Trump does that. It is not a business expense. There is a reason he gets audited every year.
Don't learn from the worst. Sorry about the falling beads in the background. I hope that wasn't. Okay. From the perspective of expenses and all that, I know, when you're starting out, it's hard to really kind of figure out what's what. Like, it's not really. I mean, if you think about it, we have online businesses. There's not really a whole lot you can do about that. But people, I do know people do deduct that kind of stuff. It's like, oh, it's marketing. It's part of my marketing. No, it's not part of your marketing. You don't get to do that, broski. But I know what I was going to ask you. We had a brief conversation one time about profit first. I want you to expand on profit first, your thoughts about profit first a little bit here, because I know that I love that concept, but it was so hard to try and implement. Go ahead and talk to the listeners about that.
So I actually don't like profit first, because like you said, it's just so confusing. So you have 5 buckets for how you're spending your money, and you have to make sure that there's enough money in each bucket to cover everything. Whereas the way that I say to put 10 to 15% away for taxes, and then just leave everything else in your business account and whatever you pay yourself. That's all I say for separating it, because it just makes it easier in my mind.
And doing all of that other. I get the logistics behind it. Like, sorry, I just kicked my bunny. I get the logistics behind it. I understand that, the idea is to make sure you're also saving for an emergency and doing all of that, which is, great. But the whole process of having to, is it 5 accounts? I can't even remember now how many accounts it is. Yeah. And just to go through all of that and then have to set up rules, and like, I can't take all of that. Like, my brain just went, I was like, I know I need to do this. This makes sense, but this is too much. So with this, with your point about paying yourself, what do you recommend that businesses, how are they calculating what they pay themselves? How should they calculate?
It depends on how much you make and how much your business spends as well. So how much is left because some people do it for how much is left in the business account after they pay their expenses. Whereas since you're the business owner, your pay should come before your business expenses. So say you want to buy a course, you want to hire a coach and all of that stuff, have you paid yourself first is the first question you should be asking. Not, can I do this and pay myself? Because you're a business owner, so you also have your own personal bills. You have to pay your rent or your mortgage, your electricity, your internet, because those aren't business expenses. Those are your personal expenses. So if you can't pay those, then how can you continue to invest in all of this other stuff?
So there's not a general rule that we could apply that would say if you're doing, say 15 to 20% for your taxes, the other percentage just like, okay, so that brings up a good point. So what you're actually advocating is what Profit First advocates, just in a very simple fashion. Don't make it overly complicated. Pay yourself first, then whatever's left. If you need to invest, if you want to invest in a coach or in a service, what's left? Can you do that? And of course, if you paid yourself first and you have that money there, you don't have to pay for it from the business. You can pay for it from your personal. So that money is still there. It's just in a different allotment. Hang on one second. I got a cough. Sorry. Did the mute button work?
No.
Oh my God.
I didn't hear you talk.
Oh, okay. So the mute button did work.
Okay.
Okay.
I didn't know you had a different mute button. I just didn't see it mute on here.
Yeah, no, I hit it on the mic. Okay. So from the end, if you could nail down how much more successful monitoring books would be from the beginning than not monitoring the books, what sort of difference would a new business owner or even somebody who just hasn't prioritized, what kind of difference would they see in terms of levels of success?
So the biggest difference, because I actually have two clients, one I just started with, and they're a brand new company. They haven't brought any money in, but they have spent a lot. And they plan to, and this is a physical product business, and they plan to open their doors next month in November, based on the time of this recording. So they have spent a lot, but they've asked me because they want to see where they're spending their money. They want to see what their financial statements look like before the end of the year. So even when they do start opening their doors and start bringing money in, they still know where they've spent their money. So that's the biggest thing, like just knowing where you spent that money and not just looking at your bank balance saying, okay, so I paid that and that and that and that. Okay, because the biggest thing is you have all these small subscriptions. So maybe you joined a membership that costs $7. You joined another membership that's $19 a month. And these things are just going out and you're probably not even using the memberships. So you don't even notice that the money's going out because they're small numbers. But when you do your bookkeeping, you're like, what is that? So you look into it more and you can cancel it.
There you go. And those things really, really add up. And I get notifications from Rocket, like your subscriptions are blah, blah, blah. I was like, God damn, let's go in there and take some of that out. But so that said, you bring up another good point. Like this is a freaking rabbit hole. Your whole fucking career is a rabbit hole for me. So in this way, what tools do you recommend for all businesses, regardless of level? And then are there levels to some of the tools that you suggest?
So if you do not have a lot of transactions in your business and you're not making a lot of money, I would actually recommend that you use a bookkeeping spreadsheet, which I have created one. I have a bookkeeping toolkit, which is very low cost, and it's a one-time cost for $37.
Oh, that's a no-brainer.
Yeah, and I walk you through how to do your bookkeeping with this spreadsheet. But once you have more than 100 transactions a month, you should be using bookkeeping software, whether it's QuickBooks or Xero. Xero is a lot less cost than QuickBooks, and they do the same thing. And if you're not an accountant, there is a major learning curve for using either of the softwares.
Bah. That's what I hate.
The software was made for accountants. It wasn't made for a small business owner, even though the QuickBooks ads say they're made for business owners. No, it's not.
It's literally not. I was using GoDaddy forever, outright. was absolutely the best. And I was so heartbroken. Like I was literally in tears when they shut down, because it's like everything is there. All the breakdown, like you could see what's what. But then when they closed and I moved over to QuickBooks, I lost it. I was like, there is no way. Like I have to go in and like categorize all these